Welcome back, and we are going to discuss about ICDS 6 on foreign exchange rates. Yes, it is effect of changes in foreign exchange rate. So why we should study this standard, and more than this, it is the toughest standard ever in all the 10 ICDS. Whether you take up accounting standards or ICDS, when it comes to foreign exchange rates or changes in foreign exchange rate, this standard really is tough. So I am going to simplify this for you. So listen carefully. Don't miss a single word which I am uttering. Let's concentrate. First thing, what is reporting currency? I'll explain first some key terms which are not there in your books. But once I explain the key terms, the whole story becomes easy for you. Okay, so are you ready? Chalo. First thing is the reporting currency. The reporting currency is the currency in which your final accounts, financial statements are prepared. Suppose example, a company like Reliance Industries Limited, Tata is there, or you think about Birlas are there, Adani's, Wilmart is there. All these organizations have to prepare the financial statements as per the Companies Act, obviously. And when you see, the financial statements are depicted in monetary terms, yani Indian National Rupee, correct? INR. Suppose same way you think about Walmart, Walmart will report in US dollars, correct? So for Reliance Industries, reporting currency is Indian National Rupee. For Walmart, it is US dollars. For Google, it is US dollars. So what does this mean? Reporting currency means the currency of the country from which the country operates, and the currency in which the financial statements are drawn and shown. Clear? Yes, sir. Now, what is mean by foreign currency? Sir, foreign currency means dollar, ruble, euros. Yes, you are right. But foreign currency means a currency other than reporting currency. So foreign currency means any currency other than reporting currency. Suppose example for us Indians, Indian National Rupee is the reporting currency. So any currency other than this is foreign currency. Like ruble, foreign currency. US dollars, foreign currency. Right? Example clear? Yes, sir. Shall we go to the third story? What is foreign operation? Foreign operation, simply a branch outside India. Correct? Suppose example, a company is Indian company and we have branches outside India. I'll tell you, PVR Cinemas is an Indian company and they started their first outlet in Sri Lanka. So whatever business they do in Sri Lanka, obviously no business, is foreign operations for PVR. Same way, the strong players in India like Reliance, Adani are doing lot of business operations in South African countries and many other countries. So any business they do outside India is called as foreign operations. Now whether it is setting up a branch or a function, no problem. An activity, no problem. It is foreign operations. Okay, very good. You understood. Shall we go to next thing? Foreign exchange rate. I actually have a doubt that per $1, what is the Indian currency to be paid now? 76 rupees. Is it? Yes. So, foreign exchange rate is nothing but for $1, for 1 unit of foreign currency, what we have to pay as Indian currency. Right? We have to pay 76 rupees. This is foreign exchange rate. So for $1, 76 rupees is the price. So we are buying $1 for 76 rupees. This is called as foreign exchange rate. Clear? One more word, last word. After this, I'll explain you the standard. Now you should be very clear with these words. If you are not clear with the words, sir, standard बोल दो, words नको. अरे यार, if you don't understand the words, how will you understand standard? ABCD नहीं आते, एप्पल पढ़ लेता क्या? नहीं हो सकता ना. चल, let's continue with the forward exchange rate. Suppose example, I have to purchase some 1,000 Tesla cars from America and sell in India. So I went to talk to Elon Musk. Hey Musk, how are you? He said, Mr. Ganesh, I am fine. How are you? I am very happy. So, shall we close the deal for 1,000 cars of Tesla? Yes, Mr. Ganesh, I am very happy for you. But I don't want to face these fluctuations in price, Mr. Elon. He said, okay, Mr. Ganesh, then I will just pay 75 rupees per dollar in future. That means after 1 year, when I will be paying the entire price of whatever cars I am taking, I will pay 75 rupees. Suppose Indian currency becomes strong, you will not be at loss. And if American currency becomes strong and I have to pay extra, still I will be protected. So it is a win-win situation for both of us. What do you say, Elon? Oh, that's a great idea. I don't have any issues. So sign the contract. Done. This is called as forward exchange contract. That means at future date, maybe after 3 months, 6 months, 1 year, we fix that for 1 unit of dollar, this much Indian currency I am ready to pay. And both the parties have to abide by this. This is called as forward exchange contract. Are you enjoying? I feel yes. Now, we understood the 5 words. Reporting currency is Indian currency, foreign currency is any currency other than Indian currency. Foreign operation means business activities of Indian companies outside India. Then for foreign exchange rate, what we have to pay per dollar. And last one is forward exchange contract, what we fix for $1 to pay whatever Indian currency for $1 in future, that is called as forward exchange contract. Let's continue with this ICDS. Now what this ICDS talks about? This ICDS talks about transactions in foreign currency. Oh, suppose when I give an order on Amazon.com, hey, I am not talking about Amazon.in. In Amazon.in, I will pay in Indian rupee, please. Correct? If it is Amazon.com, I have to pay in dollars. Correct. If I am giving orders on Alibaba, eBay, right? So if I have to pay in dollars when I do the transaction, then we can say that it is a transaction in foreign currency. Just I gave the example of dollar, it can be any other country's currency. Okay? Yeah. So transaction in foreign currency means when we buy something by paying foreign currency. Okay? Yes, sir. We'll know the meaning in detail, don't worry. Now, second thing, translating the financial statements of foreign operations. Tatas have lot of business activities outside India. English people, the people from Britain, UK, ruled us for 200 years and made Indians or gave us the habit of having a tea every day. Am I right? Yes. But today, we, the Indians, or we can specifically say the Tata company, is the seller, the biggest seller of tea and coffee in UK. That's the power of Indian businessmen. Are you enjoying? Say yes, right? Shall we go forward? Now, whatever businesses Tata do outside India, whether it is hotel, whether it is steel business by purchasing chorus or by selling tea, coffee in UK, that all are foreign operations for Tata. There, for that activities in UK, the financial statements are prepared, balance sheet, P&L account, correct? They are prepared there. But now when Tata's P&L account and balance sheet should be prepared in India, it should include the whole globe's income which Tata is earning. So that means UK financial statements of Tata should be converted to Indian currency, correct? You cannot say that Tata's balance sheet in India, Indian affairs in Indian rupees we are showing, UK affairs we are showing in pounds, and American affairs we are showing in dollars. अरे इंडियन इन्वेस्टर पागल हो जाता है यार, पहले ही इंडिया के P&L अकाउंट नहीं समझ में आते, राइट? वी नेवर अंडरस्टैंड इंडियन P&L अकाउंट. How will we understand if so many things are there? So all should be converted, translated to Indian rupee. So that's what we said in the scope. What we said, translating the financial statements of foreign operations. So scope includes three things. First two I already said. What are they? First one, transactions in foreign currency. Second one, translating financial statements of foreign operations. Third one, forward exchange contracts, which I already discussed the meaning. Okay. Yeah. But when I say transaction in foreign currency, what do you mean by it? Suppose example, I have placed an order on Amazon.com. When I am buying, selling something, then if I am buying by paying dollars, I am selling by collecting dollars, then we can say this is transactions in foreign currency. Suppose I give loan and I get interest in dollars, or I gave loan in dollars and get interest in dollars, or if I collect loan, I take a loan and pay in dollars, then these are loan taken or loan given in foreign exchange, foreign currency. So these are transactions in foreign currency. Suppose example, I gave services. Suppose example, I developed a lot of yoga and yoga training, lot of skills I have developed. About Ayurveda I learned. Arey, you don't know that the best natural treatment of a human being can be done through Ayurveda and Panchakarma therapies in India. Way before the English people understood about surgery, treatments, surgeries were done in India way back in 18th century and even before that from thousands of years. Yes, they spoke in British Parliament in 1830s about it, that India has a great surgery culture, treatment, naturopathy, everything. Balabhat, Dhanvantri, Sushruta, Charaka, these people laid down the foundation and principles for it. Anyhow, come back to the story. Suppose I am giving all that yoga Ayurvedic training by sitting in India to people in America. So I am collecting fees in dollar. Dollar. In that case, I am rendering service outside India and collecting through dollars. So this is a transaction in foreign exchange. Suppose example, we purchase some quick heal antivirus software. Yeah, if we purchase any software from outside India, for which we have to pay in dollars, then transaction in foreign exchange. Clear? Are you able to understand what I am saying? Suppose example, we acquired certain fixed assets or transferred certain fixed assets, disposed of certain fixed assets by through foreign currency, like it may be ruble, right? Ruble is of the great Russia. Yes. So if it is transacted through that, then it is transactions in foreign currency. So this way we should understand. When we buy, sell, provide service, take service, give loan, take loan, forward exchange contract, and finally I said acquiring fixed assets and transferring fixed assets, all this is done in foreign currency, then we can say that it is transactions in foreign currency. But how to record? That's a big question. Let me answer. Recording of this is done through initial recognition. How to do initial recognition? At the transaction value. Suppose example, I ordered a laptop on Amazon.com. I had to pay $10,000. So $10,000 means into 76 rupees, it will come to 7,60,000 rupees. Correct? So 7,60,000 rupees I will consider record it in my P&L account because expenditure or laptop is an asset. So I'll show it in balance sheet as asset 7,60,000 rupees. So initially when we talk about recording, it is recorded at the exchange rate on the date of transaction. Sometimes if we are doing many transactions, then we can take average exchange rate for the week or month. We can take average exchange rate also for the week or month, no problem. But if there is a reasonable stability in the prices, foreign exchange rate, then average price per week can be applied to all transactions. But if there is fluctuations, lot of changes are there in the prices of the foreign currency. Suppose dollar and Indian currency continuously fluctuating. Sometimes it is 70, sometimes it is 100, sometimes it is 60. Huge fluctuations are going on. In that case, don't take average rate. Take transaction rate. Clear? Very good. Now, what to do on the date of balance sheet, right? So, when we prepare on 31st March the balance sheet, how to record? So, I will tell that assets are classified into two categories. One is monetary items and second one is non-monetary items. So, monetary items are like cash, bank, debtors, receivables, cash, bank, debtors, bills, receivables. These are examples, okay? Bills payable, creditors. Cash, bank, debtors, bills receivable, bills payable, creditors. All these are monetary items. So on the closing date, on 31st March, what is the foreign exchange rate? That we have to see. And that we have to record. Are you able to understand? Suppose I purchased some goods. Sorry. I took some short-term loan, monetary items, correct? So short-term loan, bills receivable. I took it at 76 rupees per dollar. But now on the balance sheet date, 31st March, I see it to be 78 rupees. So in the balance sheet, I will not write 76 rupees, which is the initial price recognized, but I'll write 78 rupees, the closing rate. Okay? And that 2 rupees difference is there, na? That we have to pay extra. So debit it to P&L account, show it as expenditure. Now when ICDS says show it as expenditure, in income tax also you can show it as expenditure. Okay? While computing income under income tax. No doubt about it. Clear? Yes, sir. This is all about monetary items. Every year on the closing date, we should value, and if there is a loss, we'll deduct it while computing business income or other sources income. If it is gain, benefit for us, then we'll add to the income. This is what continuously we have to do with monetary items. And monetary items are, sir, monetary items are cash, bank, receivables, debtors, creditors, and last one, bills payable. Examples. Okay. What about non-monetary items like plant and machinery, furniture, building? What to do with this? I will tell you what to do with this. The answer is don't do anything. Simple. Whatever we recognized initially, the transaction price, that only will continue no change should be done on the closing date. Clear? Yes, sir. Now coming to the 1 minute, I have to consider even inventory, right? Because non-monetary items are fixed assets, plant and machinery, furniture, inventories, all that are there, right? So what to do about inventory? And we studied in ICDS too that inventory should be valued at cost or net realizable value, whichever is lower. Now cost we will take based on transaction value. But what about net realizable value? We should take it, right? ICDS 2 says we have to take. Then convert the net realizable value into Indian currency. Okay? And then compare the cost in Indian currency with the net realizable value in Indian currency, and whichever is lower you should record inventory at. So inventory should be recognized at cost in Indian currency and net realizable value in Indian currency, whichever is lower. Clear? Shall I go forward? Yes, that is about forward exchange only for this one inventory item, this non-monetary item. All are just treated at initial price, which we discussed. Only inventory this change is there. Otherwise, non-monetary items initially recognized, same will continue. And revaluation is not allowed under ICDS. Clear? Clear. Yeah, if income tax says that yes, you have to, then we will. But otherwise, ICDS don't allow it. Okay? Now, Income Tax Act 1961 is supreme and ICDS is inferior to it, that we already know. Or ICDS is subordinate to it, that we know. Last thing, forward exchange contract. When I agreed with Elon Musk that for $1 I'll pay 75 rupees fix. Now whatever changes happen in the market, we are least bothered. You relax, I relax. This is forward exchange contract. Now how to measure? When the transaction happens, first when we fix it today, later on transaction happens, what is the change? It may be either profit or loss. If it is profit, show it as income. If it is loss, show it as expenditure. That's it. Suppose we agreed for 75 rupees, tomorrow it becomes 70 rupees and I have to pay 75 to Elon Musk. Oh, for me it is loss. If suppose tomorrow it becomes 85 and because of the agreement I am paying only 75, then for me it is profit. So 10 rupees will be recognized as income. This is what we have to do in forward exchange contracts. Proportionately that is done over the period, right? And with this I come to a conclusion about effect of changes in foreign exchange rate. This is really tough, but I try to make it simple for you. I feel you enjoyed. Any doubts are there, please be happy to contact me. I would be very happy to clear all your doubts. I care for you, I mean, and I believe in your success.